Hello, I'm Chris Hughes, Editor-in-Chief of Abu Dhabi Finance Week. Today is day 3. It's the thematic day for technology, and you can see the place is hiving. Kicking stock that starts now.
All right, folks, let's do it. 2 minutes to go until the market close on a history-setting day here on Wall Street. Not just the as-expected short-term interest rate cut from the Federal Open Markets Committee today, but investors reacting as you might expect they would hope to do so with the Fed cutting interest rates. We are expecting to see several of the major market indexes finish not just much higher for the afternoon, but in record-setting territory. That includes a potential all-time high close for the S&P 500 and the Russell 2000, up 1.4%, the big winner on the day, expected to finish right around 25.60. The Federal Reserve earlier today announcing a cut of 25 basis points, but the real storyline perhaps not one, not two, 3 different dissenters on the FOMC for the first time in many years, although I should point out dissenting for very different reasons. We'll talk about that with our guests here in just a bit. Industrials, materials, and discretionary, those are the strongest performing sectors in the S&P ahead of the close of the tape, with utilities leading losses to the downside. Welcome to the show. This is quite the broadcast we have on tap. You're watching Taking Stock. I'm your host, JD Durkin. Mere moments away from the ringing of the iconic closing bell here at the New York Stock Exchange. Greek American Issuer Day, and representatives here to do the honors. Also, special shout out to the Einstein of Wall Street, rocking the Dow 48,000 hats, as we are expected to see the Dow Jones Industrial Average close at about 48.68. Also catching a bit here on the day, the banks, oil and energy, and much more. After the bell. There you have it with the 3 gavel strikes. Also catching a bit, as I was saying, we got the big banks, oil and energy stocks, healthcare and bio stocks catching a bit on the day, and the home builders as well. David Bush is the co-CIO of Trajan Wealth. We'll bring him in. But first, we want to take a listen to what the man himself, Jerome Powell, during one of his last public appearances as chairman of the central bank, told reporters earlier today.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although important federal government data for the past couple of months have yet to be released, available public and private sector data suggests that the outlook for employment and inflation has not changed as much since our meeting in October. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals, in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point.
That's a look at what Jerome Powell had to say. Only a few meetings left for the big man cutting short-term interest rates on the day. Let's talk with David Bush. He is the co-CIO of Trajan Wealth for his perspective on today's price action and how investors reacted to the expected cut in interest rates. Welcome to the show.
Thank you so much for having me.
So we're right about at all-time highs here across several of the indexes. What do you make of not just the expected cut from the Fed, but how investors have reacted in the 2 hours since?
It's as anticipated. Essentially, when the Fed cuts rates, it acts as a tailwind for risk assets. So the S&P 500, Dow, even small and mid-cap stocks are likely going to catch a good tailwind here.
Yeah, did everything you heard from Powell today closely align with your expectation? I got to ask you about the dissenters, because we had 3 dissenters, but they're not all on the same page as one another. In other words, they're kind of fighting this decision for different reasons.
That's right. So what Powell stated in his press conference is that they're all aligned in terms of that they need to fight inflation, but they're also concerned about the unemployment rate. So with the labor market softening, they agree that they have to do something, but essentially they choose different paths, or they voted for different paths. So the 3 dissenters, 2 no change in rate cuts, and 1, Mirren, wanted a 50 basis point change in rates.
Talk to me a little bit more about expectations for a new Fed chairman. We've heard from the president, kind of shifting the timeline a little bit. Originally, we were going to get the new Fed chair announced before Christmas. Now President Trump says it might come a little bit into January. I'd expect that person to be a bit more dovish than some of the more moderate voices on the FOMC.
I would agree with that. I mean, if we just look at Stephen Mirren, he's very dovish. And so I would expect that anybody that President Trump puts forward as the new Fed governor is going to be very dovish as well.
How are your expectations for the Fed to make these decisions when they like to say they are data dependent, but as you know as well as I do, reliable government-based data has been very tough to come by given how long the historically long federal government shutdown was?
That's right. So, and Powell actually admitted to that today. He said that the data just wasn't coming in on time, and so they're basically flying blind in a lot of ways. And I know that they have alternative metrics that they're following. But essentially, I would expect, I mean, right now we have one more rate cut priced in for 2026 and 2027, one in 2027. So I think that they're going to remain data dependent and on a wait and see approach.
Talk to me a bit more about what sectors or parts of the major markets you'll be looking for to catch a little bit of a tailwind as we continue to ease on interest rates.
I know that valuations have been a concern, specifically with large cap tech, the Mag 7. I think Mag 7 and large cap tech is going to catch a tailwind. But I'd also caution investors to consider balancing that risk with a value-tilted, dividend-oriented approach as well, because that'll help offset some of the near-term risks. I mean, look, the tech sector, there's a massive AI infrastructure build, and we've seen those CapEx numbers come in. And from that perspective, we'll see some near-term fluctuations, and there'll be reactions to any headlines.
What's your thinking on the valuations debates? We haven't really talked about the AI bubble as a prevailing narrative here the last couple of weeks, but these valuations, they concern some people out there.
They are high, and specifically if you look at names like Tesla, they are high. But the question is will their earnings growth keep pace with their price, and will that eventually lead to that? The earnings part of the valuation of the PE ratio coming up. And I think it will over the long term, but in the near term with their capital expenditures, we're going to have to be very cautious and monitoring that closely.
David Bush helping us kick off the broadcast, the co-CIO of Trajan Wealth. My man, it's been great to have you here. Come back anytime.
Thank you so much. I appreciate you.
Happy Fed Day, by the way.
Happy
I meant to
Fed
say, this is
Day.
like our Super Bowl down here for Wall Street nerds.
That's
David,
right.
thank you. Joshua, grab your microphone. Todd, you and I are going to head this way and go for a walk. Time now to talk about the earnings reports for the folks over at Chewy. Despite the fact that it was a big beat on the top and bottom line, pardon me, one and all, the team from Chewy reporting quarterly results earlier this morning, but giving lower guidance than had been expected for the current quarter. The stock originally kind of a wonky candle, gap big way at the open, very quickly went on to sell off about 6% over the day. CEO Sumnit Singh of Chewy saying we are outperforming the broader pet category and expanding market share. Shares of Chewy are up 3% so far here in 2025. Todd, before we toss a break, we'll take a look at two NYSE notables. How about GE Vernova? Hello, up 15% on the day. A huge gap up in shares today after the company raising its revenue outlook and doubling its dividend. The stock was already up 90% from the start of the year before its investor week. Shares now up 116%, understandably now trading at a fresh all-time high. Todd, before we go to break, we'll take a look here at Warby Parker. That's not a typo on your screen. That says Warby Parker stock went up 27% on the day. It's up almost 60% the last 4 trading sessions. The company this week announced a new collaboration with Google to create new AI glasses set to be released in 2026. A lot of very bullish analyst notes here on Wall Street surrounding the team at Warby Parker. This stock is now up 15% at least from the start of the year. Earlier today, FinTech TV's very own Remy Blair spoke with Jonathan Cranes. He is the CEO of Crane Shares at Abu Dhabi Finance Week. Take a look.
We've been in Abu Dhabi all week for Abu Dhabi Finance Week, but just down the road from the conference, big news out today between the Abu Dhabi Stock Exchange ADX and our home base NYSE. Now, earlier today in Abu Dhabi, CraneShares CEO Jonathan Crane rang the ADX opening bell to highlight a major milestone, the first ETFs ever to be dual listed on both the Abu Dhabi Securities Exchange and the New York Stock Exchange. It is an important step in connecting these two markets, giving investors in the region direct access to U.S. listed strategies. Jonathan joins us now from Abu Dhabi. Jonathan, congratulations on the bell this morning. Thank you so much for joining us. So first and foremost, from your perspective, why is this milestone so significant for both exchanges?
Yeah, this was a great day. We listed two funds here, KWEB and KRBN, and it was a cross listing connecting the New York Stock Exchange with Abu Dhabi. The Abu Dhabi market has grown significantly, and with a lot of institutional and retail investors here. It is really I think the ETF hub for the GCC. So by connecting New York and Abu Dhabi, it's the start of, we believe, more funds coming over also. And we think it's a lot of it's a historical day.
And as you mentioned, you brought KWEB and KRBN to ADX for this launch. So for our viewers, can you give us an overview of your company and tell me what made the two funds the right fit for investors in the region?
Sure. Yeah, so CraneShares, we're headquartered in New York City, and we're an ETF company. We focused on China strategies, on carbon credit strategies, emerging technology strategy, and alternatives. And KWEB is our flagship fund. It's a $9 billion fund listed on the New York Stock Exchange. And it's a focus on China Internet, the Internet, e-commerce, AI, and consumer market of China. And we thought that this would be a good fund, a good strategy for the Abu Dhabi market. And we saw that there was a lot of following for KWEB. A lot of investors from the Middle East have been investing in KWEB on the New York Stock Exchange. Now that it's brought locally here, those investors can buy in the local currency here and be trading during their waking hours, their market hours here. So we think that's going to be a big benefit. And then KRBN is our global carbon credit fund. There's a lot of interest here in the Middle East on sustainability, on climate investing. So we also, saw demand here in this marketplace, and we thought that was also a good strategy to bring into Abu Dhabi.
Well, Jonathan, thank you so much for joining us on this historic day. We'll see you back here in New York. Thank you so much for joining us and sharing your insights.
Look forward. Thank you for having me. I really appreciate it.
Welcome back to the broadcast, one and all. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Time now for a few fintech, crypto, and artificial intelligence related headlines for your Fed day. Bitcoin trading down about 0.8%. Pretty mild price action across the board for the crypto majors. ETH up 0.4, and Solana selling off only 0.5% or so. And now at this point of the show, we bring you continuing coverage of Abu Dhabi Finance Week. That's where FinTech TV's very own Lawrence Wintermeer sat down with Ritesh Kakad. Ritesh is the co-founder at XDC Network. Take a look.
I'm Lawrence Wintermeyer, FinTech TV, and we're here at Abu Dhabi Finance Week. I'm joined by Ritesh Kakad from XDC Networks. Ritesh, welcome.
Thank you so much. Thank you for inviting me here.
Can you give us an idea of what XDC Networks is?
XDC Network is an infrastructure to digitize your credit, digitize your invoice. So after a fintech era, in fintech, people digitize money, but now it's all about, programmability of money. And technology can be used for digitization of real world assets, like whether it's a gold or bond or like equities. And it can be digitize your invoice. We can also digitize credit market as well. So basically it's infrastructure platform, a layer, a neutral layer, a global layer, so anybody can build around existing network.
But that's fantastic with the focus not just on real world assets as in securities or commodities, but on digital assets like invoices or other things. And so, what are the 2 or 3 big trends that you're seeing come out of the industry related to that? And what's the regulatory angle on those?
Yeah, so right now what I see, like as I mentioned about fintech waves where we digitize money, but now it's more about how you programmatically use those money. That money move from one wallet to another wallet. So you are sending me something on a normal scenario. You can see that money already sent from your wallet, but actually they do a cross-border settlement. Like in backend, they do a settlement, but in a tokenized version, whenever the money moves from your wallet, I am taking ownership of that wallet. I'm taking ownership of that particular assets. And what trends I see, one is like trend around a stable coin because it's a very important settlement layer for all kind of assets.
Yeah.
Any real world asset requires settlement. So stable coin is the growing trend. Another is like tokenization of real world assets. So as I told, like real world asset can be gold, can be silver, can be bond, it can be like, money itself.
Yeah, fantastic. And now you're here at ADFW this year. How are you finding the week here? I know we're on day 2. And what are the specific things that you're seeing here?
See, I have like great connection with Abu Dhabi because I remember they were the first, like, regulators, ADGM. They came out with the first crypto regulation around 2019. And we are being
Well, when
here-
Richard Teng was actually the CEO
CEO
of the FSRA. Yeah, exactly.
Correct. So they came out with the like very clear rule books around digital assets, and they were the first in the MENA region to come out with clear rule books. And now I see that it's become so big. Now it's become a ADGM Finance Weeks. So fintech take over like entire finance. And now you can see the trends around like people they are talking about digitizations, people they are talking about money movements, remittance, cross-border payments, and you will find large organizations, they came here from worldwide.
Well, I love that. And I can't think of a better message for ADFW and the FSRA in that, we've now gone digital and they were really the early innovators in the ecosystem in the regulatory space. Ritesh, thank you very much for joining us on FinTech TV today and have a great ADFW.
Thank you so much for inviting me. Thank you.
Welcome back to the show. You're watching Taking Stock, still live from the iconic trading floor of the New York Stock Exchange. Today in the world of startups, raises, and rounds, there's really only one big one, SpaceX. Yeah, that SpaceX from Elon Musk reportedly eyeing a 2026 IPO where the company could raise over $25 billion and could put a final price tag valuation between $1 and $1.5 trillion. And by the way, if it does go through, Elon Musk would casually double his wealth, although he's already the world's wealthiest person. Joining the broadcast at this hour is Mike Bienenfeld. He is the co-head of SEC compliance at Linklaters. Did I get that right? Linklaters?
You got it, Linklaters.
Thanks a lot for joining us. It's great to see you.
No problem. Thanks for having me.
So we've heard repeatedly from Lynn Martin. She is, of course, the president of the New York Stock Exchange. She is very bullish, and she's not alone, about the general IPO space for 2026. What's your take about what we can expect?
Well, I'm looking at this from an international perspective. I'm based in London. I'm a U.S. securities lawyer based in London. Been there for 26 years. I'm very young looking. You wouldn't have thought, but there you go. So we're very excited about the prospect of more and more international European companies looking to New York for a primary listing or as part of a dual listing strategy. There's a number of companies who are looking at moving their primary listings across from Europe to New York. So I think there's a lot of activity and a lot of excitement from where I'm sitting.
Is it regulatory burdens in Europe? That tends to be one of the kind of go-to narratives, that maybe there's some onerous regulations on companies trying to enter the public space on the other side of the pond, and so more and more they're looking to U.S., or a bit more complicated than that?
I think it's probably a bit more complicated. I think no one ever thinks of the U.S. as a light touch regulatory regime, but it's often a mix of commercial, legal, and regulatory that will drive these decisions. A lot of companies are looking at the kind of their business and where their business is focused. Do they have a big U.S. presence, or other reasons why they want to tap U.S. capital or tap the attention of U.S. Analysts and investors? So there's a lot of things that go into it.
Has this overall interest shifted significantly here in 2025, or are you kind of expecting the pace that we're at now had been more or less on your radar for quite some time?
I think it was a bit, it was sort of building over the last couple of years. There were some high profile examples of companies pushing their primary listings across, or looking at the U.S. for their sole listing. And I think that momentum has started to build. Once there were a couple of success stories, a lot of other companies were looking at this option.
Yeah, I think if Carnival Cruises comes to mind as a dual listed company. We got a lot up in Toronto, Canadian-based companies, Canadian banks, oil and energy companies. They trade at the Toronto Stock Exchange, but they might also choose to dual list here at the New York Stock Exchange. Why is it advantageous for a lot of those companies to have one placement in one country, but also say, we want a piece of the action here in New York?
Yeah, I mean, look, the U.S. is the deepest pool of capital in the world, so what's not to like about that? I think the analysts understand certain sectors really well, and that's attractive. I think sometimes companies think they're going to get a bump to their multiple in New York for sectors that might not be as well understood in other environments. A lot of times you'll do a dual or triple listing strategy when you're trying to tap different pools of capital. So I think there's a lot that goes into it.
We had an easing of borrowing rates announced from the U.S. Fed today. We're seeing comparable moves from some major central banks around the world, but not all of them.
Yeah.
We're talking a lot about the Bank of Japan raising rates, a few others going the other direction. What does an easing of monetary policy in the U.S. do for the conversation?
I'm not sure it shifts it that much. I'm not sure how much a company is going to think, oh, I'm going to list in the U.S. because there was a movement by the Fed, to be honest. Obviously, it has an impact on stock prices and things like that, but obviously that's kind of a temporary thing. So I think maybe a company will be looking at the sort of economic policies of any particular government, but I'm not sure it would drive a listing decision.
Mike Bienenfeld, the co-head of SEC compliance at Linklaters. First time here on Taking Stock, but it certainly won't be the last. Come back anytime.
Thanks very much.
It's been great to have you. Folks, don't go anywhere. After a quick break, we will bring you continued coverage from Abu Dhabi Finance Week after this.
I'm Lawrence Wintermeyer at FinTech TV here at Abu Dhabi Finance Week, and I'd like to welcome Carl Nine, who's the Chief Commercial Officer of XTBO. How are you doing?
Doing great, Lawrence. How are you?
I'm really doing well. Can you tell us a bit about the play and what you're doing?
Sure. XBTO has been a digital asset provider since 2015. We've been around in the space for 10 years now, which is a fairly long time. We started as a family office, and in 2023 pivoted to become client-facing. We've been regulated in Bermuda since 2019, and recently obtained a license out of ADGM FSRA in Abu Dhabi. And we deal with institutional and high net worth individual family offices, helping them navigate the space of digital assets, from custody to trading, OTC, broker-dealer, as well as some of our hedge fund strategies that we offer to these investors.
And could you just give our viewers an idea of what sort of assets we're talking about? We've got, clearly 10 years, native cryptographic assets from BTC to network coins are going to be big. We've seen the emergence of real-world assets, but what's that sort of asset mix looking like for, the users of your platform?
So what we see today is quite interesting, right? In the past 2 years, things have evolved very quickly when it comes to institutional adoption. And thanks to a lot of factors that played into it, regulatory clarity coming from the US, the launch of the ETF by BlackRock, which is an instrument that investors are used to. So I think we're still at the beginning, which is a lot of adoptions when we look at digital asset, but in general, Bitcoin through an ETF. But there's so much more that is coming next about owning the coins. So now sovereigns, institutions are getting a bit more comfortable with the infrastructure out there to custody and trade coins directly instead of going through a wrapper like an ETF. We're still looking at beta exposure mostly, right? I mean, we know that Mubadala, Abu Dhabi Investment Council have invested in the ETF. But what we see as the next evolution is like, how do we generate alpha out of a very volatile asset class? And we know that hedge funds thrive in these kind of environments. And we're seeing more and more adoption, slow adoption, of moving from beta exposure to alpha products that would also give better risk-adjusted returns when it comes to what you would expect in a modern portfolio, diversified portfolio. When it comes to tokenization, that's something that we talk a lot in the region here, especially real-world assets. The adoption isn't there yet. What we're seeing is mostly tokenization of private credit, tokenization of funds, tokenization of equities and other instruments.
Yeah, and you raise a really good point. I'd like to add to your list of drivers for real-world assets, Larry Fink, who really has been the poster boy in many ways for real-world assets. We're here at ADGM now, and particularly in the NIA cluster here. Are you seeing any particular trends in the hedge area? I know sovereign debt's coming, but collateralization seems to be big in some of the communities I'm in. I mean, what are the 2 or 3 big things about this community and certainly regulatory direction of travel that you're seeing?
Again, I think the UAE has been at the forefront of digital asset adoption simply because the regulators were ahead of the curve. Yeah. Right? I mean, you've got the FSRA here, obviously, you've got VARA out of Dubai. So this was one of the factors that helped institutional money come into the space. And obviously talking about tokenization, lending against Bitcoin. When it comes to banks here in the region, I think they're still behind. We've seen now a lot of banks in the US or even in Switzerland that are now offering Bitcoin custody, Bitcoin trading. This hasn't happened yet. And I think there's still a bit of clarity that's required from the central bank of the UAE to allow those financial institutions to start getting into that field. And the moment this happens, that's the floodgates are then going to be open. It's obviously going to be a lot of the basics, custody, trading of some of the major coins. I don't expect the bank offering meme coins on their trading platforms, at least not at this stage. But I think what comes next is tokenization. And I think there's already some projects happening on the real estate side with real estate law to allow tokenization of real estate in the UAE and hopefully in the region.
Thanks for joining us on FinTech TV.
Thank you for having me, Lawrence.
Welcome back to the show, and on this Wednesday, December 10th, we do have fresh all-time highs for the Russell 2000 as well as the NYSE Composite Index, and that and so much more sets the stage for tomorrow here on Wall Street. Aftermath of the Fed plus earnings from Broadcom, Lululemon, and Costco. That's going to do it for today's edition of Taking Stock, and we will see you tomorrow.